Hello and welcome. We are breaking into regular programming to bring you a special earnings corner with the CEO and MD of Cognizant. Cognizant has posted its second quarter numbers and revenues have come in much better than expected at around $1.48 billion, up by around 8.3% from the previous quarter. Aside from that, PAT has come in at around $208 million. Let's in fact straight go across to Francis D'Souza. Frank, congratulations first of all for an excellent quarter once again. My first question to you is, we don't have the volume figures yet. Most IT peers have posted a good set of volume growth on a Q-on-Q basis. Can you give us the exact percentage growth in volume terms?
Yeah, Kritika, thank you very much. We had a great quarter, as you said. Revenue was up nicely. We grew about 8.3% sequentially. And our volume growth was also very, very strong. We didn't have much of an impact overall on the business this quarter for currency. So our volume growth was very much in line, coming in at about 8% sequentially.
Okay. Can you give us, can you factor in the exact kind of currency impact? Because dollar has been weakening. So can you give us a quantity, as in what is the exact impact on the revenue as well as the volume growth?
Yeah, like I said, you know, we had strong growth across all of the industries that we serve, across all the geographies that we serve. The growth was actually very, very broad-based. All of the industries that we serve grew about in excess of 7% sequentially, with healthcare being the star performer, growing at about 10.5% sequentially. And similarly, our growth was broad-based across the US and Europe at about 8% sequentially in both of those geographies, and our markets in Asia growing about 17% to 18% sequentially. As I said, currency had a very small impact across our business this quarter. Reported revenue was about 8.3% sequential, and volume growth was just shy of that at about 8% sequentially. So a very small impact of currency this quarter.
All right. And have you factored in the kind of currency volatility that you could impact on revenues and volumes for the next quarter? Of course, you have upped your guidance on a full year level. So the guidance has been upped, if I'm correct, from 29% to around 30%. And for the next quarter, you're expecting a hike of around 5.6% to 5.7%. Can you give us an idea about how the currency volatility could impact and how you factored in the currency movement for the next quarter?
We upped our guidance for the full year, Ritika, to at least 32% year-over-year growth, or about a little over $6 billion for the full year for 2011. And that's really a reflection of the fact that we see a very strong pipeline at this point. We feel confident in our ability to execute on that pipeline and capture business across for the rest of the year. Obviously, as we look to the back half of the year, there is a certain amount of economic volatility that we're factoring into the pipeline.
Right.
Currency is part of that, but we've built that into our outlook for the rest of the year. We factored those in, and we're still comfortable raising our guidance to at least 32% for the full year revenue growth.
Okay. And also, what has the pricing increase been for the quarter? And can you break up revenues in terms of pricing for us?
We, as you know, for the last couple of quarters, we've been benefiting from pricing increases that we had put in place with our clients towards the end of last year. We saw a larger impact of that in the first quarter. In the second quarter, we had a very small impact of pricing. Pricing was up about a half a percent sequentially, both on-site and offshore. So about 0.5% of our growth in the on a sequential basis, you could attribute more or less to a pricing improvement.
And do you expect pricing to remain stable in the next, say, 2 to 3 quarters and for the full year?
At this point, I think that I would expect pricing to remain stable. The bulk of the price increases that we put through at the end of last year are now in our run rate, and I would expect that that they would stay stable for the next couple of quarters.
Okay. Frank, when we spoke last quarter, you said that you expect in non-GAAP terms margins to remain between around 19 to 20%. This time around in non-GAAP terms, you have met that estimate. So would you at all expect to go beyond the 20% going forward? Of course, there is a certain amount of impact for this quarter of wage hikes. Can you also factor in the exact kind of impact that you've seen on wage hikes due to margins?
Yeah, so our stated strategy is to keep non-GAAP operating margins in the 19 to 20%, and I would expect that would be the case between now and the rest of the year. I think that we will very much be within the 19 to 20%, probably in the upper half of that range for the remainder of the year, for the next 2 quarters. So, as I said to you last quarter, this quarter we did see the impact of the wage increases that we put through. That impact was about 2 points of margin in the second quarter, resulting from the wage increases, but partly due to pricing, partly due to higher utilization, and of course our margin came down a little bit. Those 3 factors together offset the roughly 2% decrease in margin that we saw as a result of wage inflation in the second quarter.
All right. Okay, also can you give us an idea about what is your outlook on headcount? So you've added around 7,100 employees this quarter. Can you give us the net as well as the gross addition for Q3 and the full year?
We don't actually provide headcount guidance or make forecasts on projection. At this point, we have about 12,000 employees that are in our training program that are ready for deployment or will become ready for deployment across the Q3 and Q4. So we feel very, very comfortable that we have the pool of talent, the bench of talent that will allow us to meet our growth expectations over the back half of this year.
All right. Just a technical question.
We're very happy with our performance on. Sorry, we're very happy with our performance on the recruiting front.
Absolutely. You've hired around 14,000 for 6 months.
Was stable. We've hired 14,000, and our attrition has been very stable in Q1 and Q2. We feel that that's a great validation of the fact that we are and we continue to be an employer of choice.
Okay. Also, there's a stock-based compensation expense of around $23.7 million, if I'm correct. Frank, is the margin figure excluding that stock-based compensation?
Our non-GAAP operating margin excludes the impact of stock-based compensation expense. Of course, we also, in our financials, have our GAAP operating margin, and that includes the stock-based compensation expense.
Okay, Frank. Frank, an important announcement was made about 2 weeks back. You acquired the Indian operations of CoreLogic for around $50 million through a cash payment. With this, you will also be signing an important IT deal, which is for the global operations of CoreLogic. Can you give me an idea about, or rather quantify the kind of revenue increase that you're expecting from this acquisition? I'm guessing the exact amount that you had pointed out around that time was around 4 months for the impact to be seen in the numbers?
Yeah, we are very excited about the CoreLogic acquisition, the capabilities and more importantly the talent pool that CoreLogic represents that will become employees of Cognizant. Are really world-class employees. They really understand the mortgage industry very, very well. And as a result of this acquisition, Cognizant will be able to provide end-to-end services in the mortgage industry, working with CoreLogic in this important area of the market. As you know, financial services is a very important sector for Cognizant, and we're very excited about the ability to provide end-to-end mortgage services to the financial services organizations around the world. As part of the transaction with CoreLogic, we've entered into an agreement with them. There is a revenue commitment of $324 million over the next 5 years, and we expect that the transaction with CoreLogic will close towards the end of August. It's not closed yet. We expect it will close at the end of August. And the revenue impact of that, once it closes, we expect over the remainder of 2011 will be about $21 million for the 4 months, the last 4 months of 2011.
Okay. Also, are there any regulatory approvals that are required for this transaction to be completed?
It's subject to all of the customary approvals, including regulatory approvals but we expect that those we will be able to secure those between now and the end of August, and we are on track to close the transaction towards the end of August at this point.
All right, I'm just going to go into a little bit of detail into the verticals. You've seen the largest growth from healthcare of around 10%, like you had pointed out. Financial services and manufacturing are between around 7 to 7.5%. Can you give us an idea about what the traction is looking like according to the deal pipeline that you're seeing right now? And also, your gross addition for clients this quarter has been around 76, if I'm correct. So can you break up how many clients have come in from financial services, healthcare, and manufacturing? That is new clients.
Yeah, I think that when I look at our pipeline, I'm very encouraged by the fact that our pipeline is very broad-based across the industries that we serve, and equally importantly across the geographies and the service offerings that we provide. So we're seeing a very robust, a very healthy pipeline. We don't see weakness at this point in any particular area of the business. We're very encouraged by the fact that some of the service offerings that we've been investing in, like the BPO and IT infrastructure services and our consulting business, where we've been making significant investments over the last 4 or 5 years, the pipeline for those services is very robust, and we feel that we've hit the point of inflection in many of those service offerings in terms of demand in the marketplace.
Okay.
So we're very, very happy with the complexion of demand that we see in the marketplace right now. In terms of our new client adds, the number that I'll focus on, rather than the gross number of client, or rather the total number of client additions, is the number of strategic client additions. We've added a number of strategic clients this quarter, and those, again, we define strategic clients as clients that have the ability to be greater than 5 or at least $50 million plus of revenue to Cognizant going forward. Okay. So these are the largest and most strategic clients that we have in the organization. And we are really encouraged by the fact that, again, the number of strategic clients that we have continues to increase very nicely. And more importantly, that the number of strategic client adds that we have is very nicely balanced across the industries that we serve: financial services, healthcare, retail and manufacturing, and others. So we are encouraged by that, and we think that says that demand will be strong for the rest of the year and going forward.
So, Frank, just to clarify, if there have been 6 strategic deal wins this particular quarter, there have basically been 6 deals which are above the $50 billion plus range?
No, we classify a strategic client as one where in our assessment, the client has the potential to be north of $5 million and up to 50 million plus in revenue to Cognizant. So when we talk about strategic clients, these are clients that we think have that level of potential.
Okay, just quickly, how has the telecom growth been? Because we've seen a certain amount of pressure in the telecom growth from several of the IT peers. Is telecom a relatively slower growing vertical currently for most IT companies? And can you give us the exact percentage growth for telecom as well?
We don't split out telecom specifically as an industry in terms of our reported numbers. What I will tell you is that telecom is a relatively smaller portion of our overall revenue mix, but that over the course of 2011, we've seen nice growth in the telecommunications vertical at Cognizant. We feel comfortable with the growth there, and it's largely being driven by some of the newer service offerings that we've introduced for the telecommunications industry, including traction that we're seeing in the BPO business in telecommunications.
Okay.